Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Asian shares rebound from their steepest two-day decline since April, tracking Wall Street. That's as dip buyers return after brief pullback in tech shares that was driven by concerns about lofty valuations. The U.S. Supreme Court signals skepticism of President Trump's global tariffs, with key justices suggesting he overstepped. Plus, the Bank of England is expected to keep rates on hold when it meets today, breaking with its recent pattern of cuts. That's amid focus on softer data and caution over the upcoming budget. Well, it's just gone 9 a.m. across the Emirates. I'm Joanna Bersetchi in Dubai. Let's get you up to speed on markets. A green on the board. We had several days of declines back-to-back for global markets, but things are stabilizing. You can see S&P trading sideways today, better day yesterday, but the handover from Asia Pacific this morning, quite positive as well, up 1.3%. The best performing indices today, Hong Kong and Japan, amongst the biggest gainers. And one of the other big stories that we're tracking that came through yesterday afternoon was the fact that the Supreme Court are beginning to question the validity of President Trump's tariffs. So on the back of that, you actually saw a bit of an uplift in where equities were trading. But of course, no final decision yet. And this is going to linger over markets over the next couple of months. So that's something to watch out for. 10-year yields also massive move higher yesterday. 4.15 is where we're at. We moved about 7-8 basis points higher throughout the course of the day, with the Treasury hinting that a little bit more supply may be forthcoming. So one of the catalysts there, and of course just the broader risk-on environment, has been negative for these yields. And then Brent slipping a little bit this morning. We are 0.3% firmer, but of course versus where we were yesterday, we are down about $1. The Saudi official selling prices to Asia showing a little bit of a decline. So price drops to some of those official selling prices to Asia, and keeping a close track on the inventory situation as inventories continue to build in the U.S. Switching over, I also just want to point out our terminal chart today. This has been flagged by our colleague David Inglis in Hong Kong. Interesting one, because, you know, for so much of the year, we've been talking about the weakness in the dollar, in the greenback. And actually, over the past month or so, we've seen it steadily climb, steadily gain grounds, and that's only accelerated after the more hawkish Feds came through a couple of weeks ago. And what you're seeing here is that it is testing the 200-day moving average for the first time in 1 year. So maybe the surprise comeback trades towards the last couple of months of the year is going to be the strength of the USD. So something to bear in mind over there. Now, let's go back to that story that I was just mentioning. The U.S. Supreme Court is signaling skepticism of President Trump's global tariffs, with key justices suggesting he had overstepped his authority.
The vehicle is imposition of taxes on Americans, and that has always been the core power of Congress. So to have the president's foreign affairs power trump that basic power for Congress seems to me to kind of at least neutralize between the two powers, the executive power and the legislative power.
Bloomberg managing editor Jill Deeses joins us now from Hong Kong. Jill, so just walk us through what actually went down with the Supreme Court yesterday and what they're saying about the legality of these tariffs.
I think, first of all, any legal scholar would probably caution you that obviously this isn't a decision. Sometimes justices do ask very specific questions in an attempt to kind of get to the heart of the arguments here. But what we did hear from the Supreme Court justices was essentially that, kind of indicating that maybe they're injecting some skepticism into the legality of these specific tariffs. Obviously, you just heard those remarks from Chief Justice John Roberts there. We heard some fairly, maybe predictably, probing questions coming from the more liberal justices in the court. But I think, more what traders are likely paying attention to is the fact that we also got some pretty prickly questions from Amy Coney Barrett, one of the more conservative justices, as well as Justice Neil Gorsuch. So, all of that is telling us that, there's at least that challenge coming from within the Supreme Court to try to push, the Trump administration here to sort of justify its tariffs, defend its tariffs as it tries to, work this case through the courts. It may still be, maybe before the end of the year, we will get a ruling in this particular case, maybe a bit longer, but it does indicate that there's some questions here about whether or not these specific tariffs are actually going to be upheld in a court of law.
And Jill, that is going to be the big question, but it's not applicable to, I guess, all tariffs. Are there any other tools that the Trump administration can try to use to ensure that at least some of the tariffs stay in place?
Yes, that's right, Jumana. So this is a case that's specifically referencing a lot of those reciprocal tariffs, the Liberation Day tariffs that Trump was implementing country by country. What we're seeing in terms of some other tariffs, such as the ones that we're going through Section 232, which you're seeing on your screen right now, those ideas of, those more industry-specific tariffs, many of which we've already seen, actually. I mean, if you're looking at things on auto parts, aluminum, that kind of stuff that the Trump administration has already implemented this year, those are other ways that he could pursue some of his tariff regime, even if some of those reciprocal tariffs were to be struck down. Of course, when you're looking at some of these options that he has for going through other regulatory requirements to try to get tariffs in place, were these tariffs to be struck down, it's obviously worth mentioning that a lot of that does come at a bit of a price here. There's a lot more regulatory hurdles that he would have to jump through, various probes and investigations, and may actually have to get support from other branches of government in order to implement those tariffs. So it's not as sort of immediately effective as what he's implemented through executive order and such. So maybe he does ultimately get to a place where he would actually be able to implement a lot of the tariffs that he wants to, but it would be a much trickier sort of regulatory hurdle to overcome. So that is one avenue, or rather multiple avenues that the president ultimately has. Were these tariffs to be struck down? But I guess first of all, we'll have to see whether or not that actually happens in front of the Supreme Court, and then where the Trump administration goes from there.
Yeah. Jill D says, thank you so much, managing editor at Bloomberg. Well, Asian shares, along with Wall Street indices, have rebounded from Tuesday's sell-off as dip buyers returned after a brief pullback in technology shares driven by concerns over lofty valuations. For more insight, we are joined by Rashmi Garg, Senior Portfolio Manager at Dhabi Capital. Rashmi, before we talk about markets, I just want to ask about your take on the Supreme Court decision vis-a-vis tariffs yesterday and how you think it could likely impact markets from here.
Yeah, so I think, Jumana, this is an ongoing case. And obviously, I mean, if there is any skepticism related to the tariffs, which we've seen that some of the judges have expressed, then clearly there is going to be some volatility around it. But I would like to state that, first of all, we do not expect a decision to come pretty soon. And this is an ongoing case. And the second thing is that, there are other powers that the government has, for example, sector-based tariffs, which can be levied in the absence of, the country-based tariffs, where Trump used the IPA to, impose them. It will be a longer, winding road, and as a result of which we might see some volatility and we might see the treasury yields move higher, because this was really, the tariffs have been a tool to narrow down the fiscal deficit, and which is where we might see some volatility in the stock markets. But at the end of the day, we would still expect that there would be some form of tariffs.
Yeah, on your point about using it to narrow the deficit, I actually looked at the numbers the other day. It's only tariff revenue is only accounting for about 4% of total receipts. So, I mean, it's contributing, but not a huge amount. So we'll see how that story evolves the next couple of months. Let's talk to the market action the last couple of days, because today is a very different picture from what we had 24 hours ago. Do you think the worst of this mini sell-off, mini shakeout in equities is behind us?
Yes, Jumana, we do think that, I mean, in terms of the sell-off, it was pretty much expected in the sense that we do not know exact timing of a sell-off, but, the valuations were looking a bit stretched. The equity markets had been almost in a straight upwards trajectory, and this was fueled by the AI optimism that we saw. But at the same time, this is the nature of equity markets. Markets are supposed to go up and down. So there were some statements regarding, maybe AI is a bubble, or maybe the valuations are too stretched. We had too much retail participation in the market. The positioning was quite stretched as well. So it was not a surprise that the sell-off happened. However, having said that, if you look at the economic conditions in the US, they remain fairly strong. If you look at the earnings, we have nearly 80% of the S&P who've reported their earnings. And, we've had about a 12% earnings growth on a year-on-year basis. And we've also seen that, there's been a beat of 6% on the EPS. And even on the revenue side, there has been a beat, these are very good numbers. I mean, these are numbers which speak of strength in corporate America. So, I mean, as such, for us, the backdrop for equities is very benign right now. We do not see any cracks on the AI theme as well, which come out from the earnings. And in terms of, even the QT, we are expecting that the QT is going to end soon. So that is, again, a release of liquidity into the markets. So all of this, to us, points towards a benign picture for equities.
Yeah, at the same time, we know that so much of the leadership in equities has been led by a handful of those tech stocks. And you could say that they're priced to perfection. Qualcomm is another good example yesterday. The stock actually fell in after hours, down 2.5%, even though it gave an upbeat guidance. The forecast is pretty positive, but still not enough to satisfy investors. Does that not tell you that we've reached a point now where it's going to be difficult for these tech companies to keep satisfying the type of growth that investors are looking for?
Yes, you're right, Jumana. So in terms of valuations, clearly there is no argument to the fact that valuations are looking stretched at this point in time. And which is why, really, it is not about how the company is performing. It's really about the expectations and really the highest bar among expectations. So we are really looking at, if the company is able to beat what was the highest of expectations. And if they're able to do so, then we see the share market rewarding them. Otherwise, we have seen that, there is a lukewarm reaction or even a negative reaction if they're just able to meet expectations or they're able to beat expectations, but not in a very lofty way. So that is something that we are seeing and we do expect. But, at the same time, I would like to caution here that, valuation per se is never the reason for a very big sell down in an equity market. We need a bigger negative catalyst, along with which then valuation can become a supporting factor. So as long as the story is there and there are no cracks in the story, we should not expect valuation per se to be a huge negative catalyst.
Okay, so I guess I can say it now. It's November the 6th. Are you expecting a Santa rally into the end of the year? Do we keep going up?
Yes, we are expecting markets to, keep grinding on upwards. In fact, we do expect that the S&P should touch the 7,000 level or somewhere close to that by the end of the year, because as such, we think if you look at the economic data, it's fairly strong. We are going into a rate cutting cycle, and then we have increased liquidity into the market. And there are a lot of fund managers who have not been able to match the performance of the markets this year, and they would be looking to deploy capital. So because of all of these factors, we do expect the markets to keep grinding on.
Rashmi, always a pleasure. Thank you so much for coming on our show. Rashmi Garg, Senior Portfolio Manager at Dhabi Capital. Now for a look at some of the other stories we're following. ARM shares gained in extended trading after the chip designer issued a bullish revenue forecast. The company expects fiscal third quarter sales to reach $1.23 billion, surpassing the average analyst estimate. The SoftBank-owned firm says demand for AI technology is strong across the board, particularly in data centers. Qualcomm has given a bullish forecast for this quarter, saying sales would be roughly $12 billion as demand for high-end Android chips remains strong. However, it has still left investors underwhelmed, with the stock slipping in late trading. As NVIDIA's closest competitor for AI computing components, Qualcomm was coming off an AI-fueled rally that set expectations at stratospheric levels. Apple is said to be planning to use an ultra-powerful parameter AI model developed by Google to help overhaul its Siri voice assistant. Sources tell us that the two companies are finalizing an agreement that would see Apple pay roughly $1 billion a year for access to Google's technology. Apple is aiming to use the Google model as an interim solution until its own models are powerful enough. Coming up, as the Sudan war rages on, we get the details of the latest developments that have sparked global outrage. That's next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Let's turn to Sudan, where the army has rebuffed a U.S. ceasefire proposal and says it will continue fighting the rebel group, the Rapid Support Forces. The paramilitary group has captured much of the western half of the country and most recently the major city Al Fasher in North Darfur last month. Since then, reports of widespread atrocities have emerged, prompting world leaders to call for renewed talks to halt the war. For more, our chief Africa correspondent, Jennifer Zabazaja, joins us from Johannesburg. Jen, what do we know about the situation in the nation right now?
Sure, Jumana, it's important to remember that this more than 2-year war is, as what we've been hearing from a number of leaders, is apparently intensifying according to multiple reports. So you were just indicating there what's really the latest escalation, and that is what we believe to be the rapid support forces reportedly taking over the city of El Fasher, which had been the last stronghold of the Sudanese army in the west of the country. And what we've been hearing from the United Nations and also the humanitarian organization Doctors Without Borders is reportedly more than 30,000 people have fled the famine-stricken capital of North Darfur state. We've also been hearing reports about hundreds of people needing emergency treatment, and the UN's Human Rights Office also citing, quote, multiple distressing videos, as they put it, from Al Fasher showing dozens of unarmed men being shot or reportedly lying dead, surrounded by RSF fighters who reportedly accuse them of being army soldiers. Now, the concern really is that potentially we do see this crisis intensifying in ways that many people did not expect, but also, as some of our Bloomberg reporting is suggesting, potentially even more significant of a situation than what we've seen in also Ukraine and in Gaza. We should note, though, that in this 2-year war, an estimated 150,000 people have already been killed. Famine is also spreading, and a report this week said that just about 45% of the population, upwards of 21 million, are struggling to secure food. And you were just mentioning there what we have heard from the United Nations. Antonio Guterres, the Secretary General, actually speaking from Doha earlier this week and saying that the conflict is spiraling out of control. And really the concern here is that the country is potentially moving towards a Libya-style split within the nation.
Jen, what efforts have there been to try to resolve the conflict?
Sure, Jumana, you mentioned this briefly in the intro, but many of the international efforts that we've actually seen over the past few months have not been able to yield any direct result. If we take a look at what we've just seen over the past few weeks, we have seen the U.S., Egypt, Saudi Arabia, and the UAE, the so-called Quad, at least trying to make some attempts to resolve the conflict, but not being able to at this point in time. Right now, we heard earlier this week from Caroline Leavitt, who is the press secretary for the White House, who said that the United States is actively engaged in efforts to bring about a peaceful resolution to the conflict, also adding that Washington is speaking with the rest of these nations about a peace process, but also about an immediate humanitarian situation, the concerns there, and long-term political challenges. Last month, we did see Masad Boulos, who is the U.S. advisor, meeting with the Sudanese Army's chief, El Burhan, and talking about ways in which they could potentially find a resolution to the conflict, potentially floating sanctions, at least being lifted, some commercial deals, but nothing at least at this point in time. And just lately, we heard from Sudan's army who expressed gratitude for some of the efforts that have been made to try and propose a peaceful resolution. But at this point in time, they're saying instead they plan to rally public support in the nation to help them continue to fight the paramilitary forces.
Jen, thank you so much. Jennifer Zabazaja, our chief Africa correspondent in Johannesburg. Now for a look at some of the other stories we're following. Nigeria has returned to the global debt markets, raising over $2 billion in a bond sale as investor appetite for African debt surges. The move signals growing confidence in the region's economies, with countries like Kenya and Angola also issuing new bonds amid improving global market conditions. The Nigerian offering was briefly delayed after U.S. President Donald Trump threatened U.S. military action against Islamist militants in the country for what he claimed was the Nigerian government's failure to prevent systematic killings of Christians. In a new video on Truth Social, the president says the U.S. will stop all aid to Nigeria.
We're going to do things to Nigeria that Nigeria is not going to be happy about, and may very well go into that now disgraced country, guns a blazing, to completely wipe out the Islamic terrorists who are committing these horrible, horrible atrocities. I'm hereby instructing our Department of War to prepare for possible action. If we attack, it will be fast, vicious, and sweet.
The Republic of Congo made a dramatic return to global debt markets. The government sold $670 million in bonds. That's its first international debt sale in almost 20 years. To draw investors, Congo offered one of the world's highest yields of 13.7%. The government plans to use the proceeds from the sale to extend the average maturity of its public debt, ease short-term refinancing pressures, and support liquidity. Ghana's inflation rate has fallen to 8% in October, its lowest in more than 4 years. Annual inflation has also decelerated from 9.4% in the previous month, with prices falling 0.4% on month. Ghana's Central Bank's Monetary Policy Committee cut the key rate by a record 350 basis points to 21.5% in September, and is set to announce its next decision on November 26. Still to come, Turkish Airlines takes aim at engine makers, accusing them of monopolizing power and driving up prices. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersecci in Dubai. NVIDIA CEO Jensen Huang has told the Financial Times that China is going to win the AI race. He says that's based on lower energy costs and fewer regulations. Huang also accused the US and UK of cynicism over AI, calling instead for more optimism. His remarks come after President Trump maintained a ban on NVIDIA selling its most advanced chips to Chinese customers. China is rolling back tariffs on U.S. farm goods and lifting export curbs on American firms, and moves tied to a new trade pact with Washington. The Finance Ministry will drop levies on soybeans, corn, wheat, and chicken starting on November the 10th. Beijing is also removing 25 companies from its trade control list after the U.S. eased its own tariffs on Chinese imports. And a look at markets. Things are looking cheerier today. We have lots more green on the boards, while the handover from Asia Pacific is green. Most of these futures trading sideways, but a better day for Wall Street yesterday, ending up in positive territory. So today we are seeing some stabilization. Big move upwards as well in U.S. Treasuries yesterday, north of 7-8 basis points, led by the 10-year and 30-year too. So keeping a close eye on some of those yield movements, in addition to the ongoing support for the USD. Now, coming up, Saudi Arabia has released strong PMI numbers for the month of October. We unpack the figures with Khatija Haque, Mastercard Economics Institute Chief Economist for Eastern Europe, Middle East, and Africa. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Asian shares rebound from their steepest two-day decline since April, tracking Wall Street. That's as dip buyers return after a brief pullback in tech shares that was driven by concerns about lofty valuations. The U.S. Supreme Court signals skepticism of President Trump's global tariffs, with key justices suggesting he overstepped. Plus, the Bank of England is expected to keep rates on hold when it meets today, breaking with its recent pattern of cuts. That's amid focus on softer data and caution over the upcoming budget. Well, it's just gone at 9:30 a.m. across the Emirates. I'm Joanna Bersecci in Dubai, checking in on how markets are faring this morning. Better handover from Asia today, led by strong gains in the Nikkei and Hong Kong. So a bit of a turnaround from the price action we've had over the last 2 days. Before that, Asia Pacific up 1.2%. S&P futures leaning sideways, though we did have a better end to the day yesterday. No doubt boosted by this news that came through from the Supreme Court, with the implication here that perhaps some of those tariffs that have been imposed by the Trump administration are questionable under the Supreme Court's view. So that is a story that's going to play out over the next couple of months and could actually lead to a reevaluation of these tariffs and possibly even tariff refunds too. So something to think about there. 10-year yields up at 4.15. We moved quite a lot yesterday in trade, so up 7-8 basis points throughout the course of the day. 10-year and 30-year leading the move higher in yield terms. And then Brent this morning just shy of $64, up about 0.4%, but lower than where we were a couple of days ago. Keeping a close eye on the inventory buildup, that situation in the U.S., in addition to news overnight that Saudi Arabia have cut their official selling prices to Asia. And switching over, this is our terminal chart today. Take a look at how the USD is faring. Slowly climbing back again. Still substantially weaker on the year. But as you can see, the Bloomberg DXY is now testing its 200-day moving average for the first time in 1 year. So a turnaround in sentiment as it pertains to the greenback, to the USD. U.S. exceptionalism perhaps back on the table again, given the strength in U.S. equities. And then also, don't forget, the Fed has been more hawkish as of late. So that's giving the dollar a bit of a boost as well, especially in the last week or so. Now back to this region. Saudi Arabia's PMI rose sharply to 60.2 in October, up from 57.8 in September. The reading points to a marked improvement in the kingdom's non-oil private sector. Joining me now is Khatija Haque, Mastercard Economics Institute, Chief Economist for Eastern Europe, Middle East and Africa. So a whole bunch of PMIs came out this week. Let's start with Saudi Arabia, because it did actually surprise to the upside. 60 handle is reflective of an economy that's growing quite strongly. I feel like that's at odds with the narrative that's prevailing, that Saudi Arabia has been slowing down because of its oil growth.
Yeah, I mean, the oil side has also picked up, but certainly the non-oil sector is firing on all cylinders. And when we look at the components of the PMI, we've seen an improvement almost across the board. So domestic demand has been quite strong. Exports recovered quite strongly last month. And we saw, the highest increase in employment in the private sector in around 16 years.
Yeah.
So that all points to a very vibrant private sector that is looking to invest in the long term, grow their workforce, and expand. So that's quite a positive story.
One of the numbers that jumped out to you, consumer spending has grown over 10% year on year between January and September. I mean, these seem to be very, very high figures. What do you think is driving that?
So this is official data from the central bank, and it's a proxy for consumer spending. So it's looking at point of sale transactions, ATM withdrawals, and also Mada debit card spend. And that has grown, as you say, over 10% in the first 9 months of the year. I think low inflation has helped, but really it's an increase in activity, opportunity, employment. So we've seen unemployment fall very sharply over the course of the last 18 months or so. And that's being reflected in a very strong consumer. That's been a big driver of activity in the kingdom when we look at the GDP figures as well.
I guess the question is, how diversified actually is the Saudi Arabian economy? And what are the numbers telling us?
So there has been significant progress on diversification. I think now we're roughly at about 50% non-oil versus 50% oil. But within the non-oil sector, the growth, again, is happening across a number of different spaces. So we see financial services growth, we see obviously construction, logistics, transport, tourism. All of these are driving activity across the kingdom.
Yeah. So we've been tracking the price in oil, obviously, the last couple of days, especially since that OPEC decision. There's a lot going on there, but I think the view is that there's a massive supply glut that's going to occur in 2026 that could pose downward pressure on these markets. What happens to Saudi growth, not just finances, but Saudi growth, if oil, say, breaks through $60 to the downside?
So I think what we've seen this year, and there has already been pressure on oil prices this year, and even against that backdrop of uncertainty around global demand growth, we've seen OPEC Plus accelerate the pace at which they've brought back production to the market. So when we look at their schedule that they published at the end of 2024, they only plan to get to a full unwinding at the end of next year. We're pretty much already there.
Yeah.
So it makes sense that they've now slowed the pace to see how things evolve over the next few months. If oil prices take another leg down because of oversupply concerns, we don't think that'll, in the short term, impact activity in the kingdom, because the government's made it quite clear that even when they are running a budget deficit, their focus remains on investing for the long term. They do have a very strong balance sheet. They do have low debt levels, and they have been aggressively raising finance through the capital markets in order to to allow them to continue to invest.
Yeah.
And we don't see that that's going to be a problem over the next couple of years. So the debt to GDP ratio is up to just over 30%. It's a big jump from last year, certainly, but it's still very low by global standards.
Okay. A comment on the UAE PMI figures as well. What is your takeaway from there?
So we had a very slight drop in the headline number.
53.8 versus,
That's right. But when we look at the main components, there hasn't really been a material change. There was a bit of weakness on the export order side, but activity is, a similar pace to September. Employment has largely been unchanged. There doesn't seem to be any meaningful inflation coming through in the numbers either. So overall, we're still in expansion territory for the UAE. We're still in the sort of 50 to 55 range. And that, I think, is a pretty respectable place.
One of the stories that I was looking at overnight was the fact that Qatar are looking to invest, I think it's $3.5 billion into Egypt overnight. And you look at the Egypt PMIs, and they're actually one of the few that are sub 50, so i.e. still in contractionary territory. What is going on there?
So the PMI surveys, I mean, they've been in contraction territory for almost as long as I can remember in the recent history. But it is at odds with the official GDP data. So even though the PMIs are just about sub 50, we did see an improvement in the latest survey on export orders in Egypt as well. But when we look at the GDP figures, they're growing at 5% in the second quarter of the year, and a big driver of that has been private consumption and investment. So when the official data does show, expansion and investment driving activity, so I'm not sure why that's not being reflected, perhaps, as we might expect in the survey data.
Okay, interesting dislocation there. I want to take you down a different tact, and this is specific to Mastercard. You put out a travel blog talking about just consumer travel habits. And what have been the main findings for specifically GCC travelers and when they're spending money?
So the blog really looks at how GCC travel abroad has been changing over the last 5-6 years. And what we've noticed is, particularly in the last 12 to 18 months, we've seen an increase in GCC travel within the Eastern Europe, Middle East, Africa region. So yes, the main corridors remain Western Europe, the US, but we're seeing an increase in travel to Central Asia, around the Middle East, and into Africa. So Egypt has been one of the fastest growing markets in terms of cross-border spending. And we're also seeing an increase in travel from the GCC to Asia. So Japan was one of the markets that stood out in terms of the growth in cross-border spending from our region into Japan this year. And then also other Asian markets, Thailand, China, Hong Kong.
And have there been any noticeable changes in spending trends or spending habits versus a couple of years ago?
Yeah, so we've noticed that GCC travelers are looking for experiences, and they are prioritizing spending on experiences over spending on things, perhaps. We noticed in particular a big increase in the share of wallet spent on dining. And also people are looking for upmarket luxury hotel accommodation as well. So people are willing to spend a little bit more on hotels when they travel. They're booking more 4- and 5-star hotels. So that's been indicative, I think, of shifting preferences as well.
Yeah, so interesting. Khatija, thank you so much. Khatija Haque, Mastercard Economics Institute Chief Economist for Eastern Europe, Middle East, and Africa. Now for a look at some of the other stories we're following. ADNOC is poised to win conditional European Union approval for its €12 billion takeover of Covestro. Bloomberg has learned the European Commission is preparing to give the go-ahead in the next few weeks after ADNOC offered concessions, including a pledge to maintain Covestro's intellectual property in Europe. A Qatari state-owned real estate company will make a $3.5 billion cash investment in Egypt in a project on Egypt's Mediterranean coastline. Bloomberg has learned Qatar's DR will be developing tourism sites, other real estate projects, and golf courses with the aim of attracting regional and international visitors. The U.S. is asking the United Nations Security Council to lift sanctions on Syria's president and his interior minister before Ahmed Bolat visits the White House next week. Both men were under terrorism-related sanctions for their affiliation with al-Qaeda and the Islamic State of Iraq and the Levant before seizing power in Damascus last year. U.S. President Donald Trump is expected to announce Syria will formally join the 89-member global coalition to defeat ISIS next week in Washington. Turkish Airlines says aircraft engine makers are taking advantage of surging demand in aviation to drive up prices. In an interview, the chairman, Ahmet Bolat, spoke about what the sticking points are in engine talks for the airline's latest order.
Look, the mathematics is very simple. As IATA already informed, per passenger, the profit decreased till $7. Turkish Airlines is doing a little better than the average. And the fleet growth or the models has to be sustainable, the cost effective. The new type, new generation aircraft, wide or narrow body, are fuel efficient. Now, if the engine producers is trying to get back this efficiency by increasing the engine costs, then the aviation will not be sustainable. Now look at the EBITDA margins of the airlines, and look at the producers. IATA figures, this is also more than 25% of some of the engine manufacturers' margins, profit margins. So it's not really only cost of the engine producers. I believe that it's a little bit monopolizing, using this power to increase the prices of the engines.
Mm-hmm. And then zooming out, you had the target just recently to hit ultimately 600 new planes, both from Boeing and Airbus. Where does this latest order leave you in terms of that target?
You see now from the manufacturers, Airbus and Boeing, we closed. This was the last part, 225 aircraft. But we are going to continue to lease, operational lease from the lessors. For example, this year only 26, only 3 wide bodies are coming. And with the problems in the production, both Airbus and Boeing are delaying the aircrafts, you see. Some of them are delayed 2 years. So then we have to find alternatives. One of the alternatives is from the market, from the lessors. So we are not going to have big orders, but we are going to have small, 5, 10, 20 orders from the lessors.
Any timeline you can give on that? Is that next year?
We have, right now we are in discussions with the big lessors. We might announce soon also maybe around 30 new delivery from the lessors.
That was Ahmet Bolat, Turkish Airlines chairman, speaking to Bloomberg's Patrick Sykes. Cathay Pacific shares jumped in Hong Kong after it announced it will buy back shares owned by Qatar Airways. Cathay will buy Qatar's almost 10% stake for just under $900 million if shareholders approve. Qatar says the sale is part of its strategy to optimize investments, while Cathay says the buyback shows confidence in Hong Kong's aviation hub status. Well, coming up, it's decision day for the Bank of England. We'll tell you what to watch for as Andrew Bailey faces a tough call on rates. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. The Bank of England looks set to pause its rate-cutting cycle for the first time since it began easing last August. Governor Andrew Bailey is expected to strike a cautious tone with inflation still elevated and the upcoming budget likely to influence the central bank's next move. Bloomberg's Lizzie Burden joins us now. Lizzie, well, I guess the expectation is that they won't cut, but we have to keep a close eye on the vote splits, right? Because there's still some members of the committee that probably will be opting for a rate cut today.
Absolutely, Jumana. The expectation, as you say, is that they are going to hold rates at 4%. It would break with that cadence of quarterly cuts that we've seen since August last year. It would break with what the Fed's been doing. But as you say, they could surprise us. They could cut rates today. Nomura, Goldman Sachs, Barclays seeing that. And the vote split could hinge on the governor, even if most economists think it could be 6-3. And the reason that it's so tight is, first of all, because they're inching towards neutral rates. Most economists economists think that's 3%, and the closer they get, the more carefully and slowly they're going to want to move. But also, there's this budget on November the 26th. And yes, the Chancellor, Rachel Reeves, in her speech on Tuesday said it's going to be disinflationary, but I doubt the Monetary Policy Committee will want to make a decision on that before they see the actual policies. It means, by the way, that the forecasts today are a bit moot, because they can't take account of the budget before it comes. The expectation is that inflation is going to be downgraded in the forecast for this year and next compared to the August forecast, but they'll keep the growth and unemployment outlooks the same. But I'm really interested to hear what the governor has to say about the budget, because the Chancellor, of course, was criticising the BOE when she was speaking on Tuesday. She was saying that rates at 4% are constraining business borrowing, and some people have said that's a bit Trump-esque.
Yeah, well, the thing is that these Bank of England conferences, I remember back in the day, it was impossible to get anything out of them before the actual budget was released. So we'll see whether they give any inkling of how they're thinking about the budget and its impact on the UK economy. What else should we be watching out for in the press conference, Lizzie?
Well, the big question, Jemana, is if they hold today, how long will that pause last? And so to answer that, I'm interested how the governor characterises the inflation print that you mentioned. 3.8%. It was lower than the Bank of England's forecast. It's lower than the rest of economists' forecast, but it's still, of course, nearly twice the BOE's 2% target. How does he talk about the labour market at this point? Because remember, there were pretty hawkish hints the last time about food price inflation, about inflation expectations. And if the communications today are dovish, or indeed if they cut, you could see a continued outperformance for gilts, as we saw throughout October. And $1.30 is the key level to watch on cable if they're very dovish.
Bloomberg's Lizzie Burden, thank you so much. And join Lizzie for special coverage of the Bank of England's rate decision and Governor Andrew Bailey's news conference later today on Bloomberg. And coming up, world leaders are gathering in Brazil as the focus turns to climate action at COP30. More on that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bercecci in Dubai. World leaders are gathering in Brazil as the focus turns to climate action at COP30. Bloomberg's David Gura reports from Rio de Janeiro on the challenges and opportunities shaping the global response.
So this gathering is taking place a few weeks after President Trump went to New York and addressed the UN General Assembly and really shocked the world when he declared climate change a scam. After that speech, a lot of world leaders had to go back to the drawing board and kind of plot a path forward here, fighting climate change without the U.S.'s participation and leadership. Here in Rio, there have been some national leaders, but by and large, we've talked to mayors and governors and business leaders who are trying to find ways to work together absent the U.S.'s participation. And a big area where they can find some common ground here is on AI, on the growth of data centers. Of course, that's been happening at a breakneck speed here, and a lot of leaders are trying to figure out a way to do that in a more sustainable way. The focus now shifts in the coming days to Belém, a city on the Amazon River. That's where world leaders are going to convene, and it's notable who's not going to be there. President Trump is not going to make that trip. President Xi Jinping is not going to be present for those talks as well, but there will be leadership from the European Union and the UK. They just had a fraught debate in the EU about what those commitments might be when it comes to climate change goals over the next 15 years. We will see over these next few weeks if they can come together, all these nations, to find some sort of agreement on a way forward when it comes to climate.
Bloomberg's David Gura in Rio de Janeiro for COP. Now for a look at some of the other stories we're following. Typhoon Kalmegi has now killed at least 116 people in the Philippines, making it the country's deadliest storm in a year. More than 500,000 residents have been displaced as floods submerge homes, with Cebu province reporting the highest casualties. A Philippine Air Force helicopter deployed for rescue operations also crashed, killing 6 crew members. Authorities warn another tropical cyclone could reach super typhoon strength by Saturday, bringing life-threatening conditions to Luzon early next week. Tanzania has reopened its border with Zambia after post-election unrest brought consignments to a standstill last week. Zambia Revenue Authority says border authorities are working on clearing a backlog of around 250 trucks daily in each direction. Unrest has eased since President Samia Suluhu Hassan was sworn in on Monday following a disputed election that was marred by violence. And NVIDIA CEO Jensen Huang has told the Financial Times that China is going to win the AI race. He says that's based on lower energy costs and fewer regulations. Huang also accused the US and UK of cynicism over AI, calling instead for more optimism. His remarks come after President Trump maintained a ban on NVIDIA selling its most advanced chips to Chinese customers. And a look at how markets are faring this morning, bucking the trend of weakness the last couple of days. Well, you have now futures trading sideways, a little bit more red on the screen. But bottom line is the pickup and the handover from Asia this morning, very, very strong. You have the Nikkei up more than 1.4%, the Hang Seng up 1.6% as well. Yesterday, we did see a green positive close for Wall Street with the S&P 500 ending up 0.4%, the Nasdaq up 0.6%. So shedding off some of those concerns about a perhaps more deeper sell-off or more prolonged sell-off. So some stabilization coming through. This morning, we're slipping a little bit. Also, attention on U.S. Treasuries. We saw quite an outsized move yesterday from 10-year plus. So the curve steepening back up again. The 10-year yield sitting at 4.14, about 7-8 basis points higher today, about 1.5 basis point lower. But again, the trend has been for yields to move higher. This, as the Treasury hinted, that they may be looking to issue more in the coming months. So that's been putting some pressure on the yield curve, in addition to the Supreme Court decision yesterday that over questioning the validity of some of Trump's tariffs. So that's going to be a big story we're going to be watching out for into the end of the year as well. But that was it for Horizons Middle East and Africa. I'm Joanna Versace in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.